Good afternoon to all, and special good afternoon to commerce students. Myself, S.V. Prasanna Lakshmi, Principal TSMS Aminabad. Today, before starting our class, I would like to thank once again our Additional Director, Sir, and Joint Director, Sir, for giving us a great opportunity in conducting this webinar sessions. I'm happy to inform you that we have completed 50% syllabus in commerce and accountancy, children. Coming to today's session, children, today let us learn about ledger. You know, in last accounting session, what we have learned is journal. There, you know, what we have learned, journal means all the entries you have learned. Now, today in the ledger, what we are going to learn is how to sort it out, how to enter, how to separate on each individual journal. In every journal, you know, there will be two accounts. So how to post the entry from journal to ledger to explain you, to make you clear and make you understand. Today, you know, well known your teacher, CH.STALIN BABU, PGT Commerce, working in TSMS Chowdaram from Jangam district. Sir is ready. So children, as you know, ledger means you must have your weapons. That is weapons, I mean, your book, your scale, pencil, all everything. Keep ready and try to learn how to draw the account. It's very, very important. Already have mentioned you, starting from as you put your pen on the paper, your mark starts. That is a specialty of our subject. So as you just open an accounts and keep, and your time is up, for that drawing accounts also you'll get half mark. So children, be ready and learn carefully each and every rules and what are the instructions says. So follow them. Over to you, sir. All the best.
Thank you, madam.
So you can start.
Good afternoon to all the principals, teachers, viewers, and my dear students. Myself, CH.STALIN BABU, PGT Commerce, Telangana Model School, Chowdaram, Jangam. Today, our topic is ledger from accountancy. So at the end of this session, you will be able to learn the meaning of ledger, format of ledger account, and you will define posting, procedure for posting of an account, and balancing of account. So today's topic is ledger. If you observe the accounting cycle, so it starts with source document. From the source document, we prepare the journal. In the earlier chapter, in journal, we learned analyzing of business transaction and classifying the accounts involved, accepts involved in the transaction, and recording the journal entry based on the principles of debit and credit. So journal is a primary book. So in the journal, we record all the business transaction. So at the end of the day, if you want to know the information regarding an account, the journal cannot provide the net results of an account. If you want to know how much amount you have to receive from the customer, you have to go through each and every page of journal and find out how much amount should be receivable from the customer. It is very big task. So to overcome this limitation, we maintain another book called Ledger. Ledger is nothing but a book. Ledger is a book which facilitates recording of all types of business transactions like personal, real, and nominal account. We separately maintain each and every account in the ledger. So ledger is nothing but a set of accounts, entire set of accounts we maintain in the ledger book, like personal accounts, real accounts, and nominal accounts. I think you all of you know journal is a book of prime entry. So first we record the business transaction in the journal. So journal is called book of prime entry. Here ledger is called book of secondary entry. So in the ledger, we prepare separate accounts for personal, real, and nominal accounts. So by verifying the ledger related to the personal account, we know whether the person involved is a debtor to the business or creditor to the business. By examining the real account, we know what is the value of assets. By verifying the nominal accounts, we know total income or total expenditure of the account. It is possible with the help of ledger. So ledger is nothing but a book in which we maintain entire set of accounts that is related to personal, real, and nominal account. It is the second book. So it is called book of secondary entry, or it is also called book of final entry. So let us see the pro forma of an account. So what is the shape of an account? So it is capital T. The shape of the account is T shape. So the shape of the account is T shape. In that we have total 8 columns. 4 columns on the left hand side and 4 columns on the right hand side. On the top of the table format, we write the title of the account. On the top, we write the title of the account. On the left hand side, we write DR. This DR denotes debit side. On the right hand side, we write CR. This CR denotes credit. So the left hand side is called debit side and the right hand side is called credit side. So in the date column, we have 4 columns in the debit side and 4 columns on the credit side, right? Date, particulars, JF number, amount. And the same 4 columns on the credit side. Date, particulars, JF number, amount. JF means journal folio number. So in the date column, we record the date of the transaction. In the date column, we record the date of the transaction. In the particulars column on the debit side, while writing the entry, we write TO2 and follow the name of the credit account in the journal. So we write the debit side, name of the credit account in the journal. In the credit side, we write the date of the transaction. In the particulars column, while writing the account, we write BY by and followed by name of the debit account in the journal. So here we write the title of the account. In the debit side, we write the name of the credit account. And on the credit side, we write the name of the debit account in the journal. That is means opposite side. In the debit side, we write the credit account. The credit side, we write the debit account. This is the format of the account. Okay, children. So let us see what is posting. So posting is nothing but a process. Posting is nothing but a process. In posting, the entries we made in journal. So the journal entries we recorded in the journal are transferred to ledger. It is the process of transferring business transactions recorded in the books of journal into the concerned account opened in the ledger. So posting is nothing but the process of transferring journal entries from the journal to ledger is called posting. Generally, it may be done daily, weekly, monthly, as per the requirement of the business. So posting is nothing but the process of transferring information from journal to ledger in the concerned account is called the posting. So let us see the procedure for posting of an account which has been debited in a transaction. So in the step 1, enter the date of the transaction in the date column on the debit side, that is left hand side. So we are talking about the transaction. We are talking about the account which has been debited in a transaction. That means debited in a journal entry. If it is debited in a journal entry, we have to post on the debit side. We have 4 columns on the debit side. That is, first one is date column. So in the date column, we have to enter the transaction date on the debit side. What is the second column? Particulars column. In the particulars column, we record the name of the account credited in the journal. So in the debit side, we have to post the name of the account credited. Debit side, credit account. Debit side, credit account. The recording of name of the account created in the journal in the particulars column on debit side. While writing the debit side, we prefix TO2 and name of the account created. So what is the third column? JF column. What is mean by JF? JF means journal folio number. So journal folio means from which journal, from which page from the journal we are taking this account is recorded here. So it is recorded in real-time accounting only. As a student, you need not to write anything in JF column. So what is the fourth column? Amount column. So in the step 3, enter the relevant amount in the amount column on the debit side. So we are talking about the account which has been debited in a transaction. That means the account is debited in the journal entry. Let us see with one example. 2019, January 1st, Raju commenced business with rupees 25,000. Raju commenced business with 25,000. That means Raju started business with 25,000. So what is the journal entry? So what is coming into the business? Cash. Who is the giver of the cash? Raju. Then what is the journal entry? Cash account data to Raju's capital account. I think you are able to write the journal entries. So what is the journal entry here? Cash account data to Raju's capital account, being business started with cash. For suppose, if we are going to prepare the cash account, we are going to prepare the cash account. Cash account is debited or credited here? It is debited. Cash account is debited in the journal entry. That means cash account is debited. So we have to post on the debit side of the account. See, this is cash account. So put DR on the left side and CR on the right side. So what is the transaction? 2019 January 1st, Raju commenced business with rupees 25,000. The journal entry is cash account data to Raju's capital account. So which account we are preparing? Cash account. So we are preparing the cash account. The cash account is debited in the journal entry. So it is debited in the journal entry. So we have to post on the debit side. So we have to check whether the cash account is debited or credited in the journal entry. The cash account is here debited. So we have to post on the debit side. Is it clear? So what is the date? In the date column, we record the date of the transaction. What is the date of the transaction? 2019, January 1st. So in the particulars column, we record the name. We are recording on the debit side. In the particular column, we record the credit entry. What is the credit entry here? Raju's capital account. So we write Raju's capital account in the particulars column. So while writing the credit account, we have to use TO2 and follow the name of the account credited. So we write to Raju's capital account in the particulars column, and in the amount column, we write the relevant amount. What is the relevant amount here? 25,000 should be recorded in the amount column. So we have to check whether the account is debited or credited. Which account we are preparing? That account is debited or credited in the journal entry. Let us see the procedure for posting of an account which has been created in a transaction. That means that is created in the journal entry. If the debited is, procedure is different. If it is created is, procedure is different. If the account is created, what is the procedure? So if the account is created, we have to post on the credit side. So enter the date of the transaction in the date column on the credit side, that is right hand side. So what is the second column? Particulars column. In the particulars column, we record the name of the account debited. So here account is created. So we have to take the name of the account debited in the journal in the particulars column on the credit side. While writing the credit side, we prefix the word by and name of the account debited. So in the JF column, we should not write anything. In the amount column, we enter the relevant amount in the amount column on the credit side. We take the same example and post the credit transaction. Raju commenced business with 25,000. What is the journal entry? Cash account data to Raju's capital account. Previously prepared the cash account, that is debit account. Now we are going to prepare Raju's capital account. Here Raju's capital account is created. So we are preparing the account which is created in the journal entry. Let us see the Raju's capital account. So what is the title of the account? Raju's capital account. What is the transaction? Raju commenced business with cash 25,000. What is the journal entry? Cash account data to Raju's capital account. So which account we are preparing? Raju's capital account. We have to check whether the Raju capital account is debited or credited in the journal entry. So in the journal entry, it is credited. Raju's capital account is credited. So we have to post on the credit side. If the account is debited, we have to post on the debit side. If the account is credited, we have to post on the credit side. Here, Raju capital account is credited in the journal entry. So we have to post on the credit side. So what is the date of the transaction? 2019, January 1st. We have to write on the date column. So in the particulars column, so we are writing on the credit side. So we have to take the debit account. That is opposite account. Opposite to the credit is debit. So while writing in the particulars column, we use the word by and follow the name of the account debited. Here is cash account. So we write cash account in the particulars column and the amount 25,000 in the amount column. Children, so we have to check whether the account is debited or credited. So here Raju account is credited. So we have to post on the credit side the name of the account debited. The name of the account debited is here cash account. We have to post cash account in the particulars column. This is the procedure for recording the credit account which is created in the journal entry. So we see one example problem which is given in page number 45. Journalize the following transaction and post them into their respective account in the ledger. 2019 January 5th, Ramesh commenced business with rupees 25,000. So what they are asking? They are asking to journalize the following transaction and post them into their respective accounts in the ledger. So first we have to journalize the transaction. Here he given 4 transactions. On 2019 January 5th, Ramesh commenced business with rupees 25,000, and January 10th purchased office furniture for cash rupees 10,000, and 12th goods purchased on credit from Rao rupees 8,000, and 25th sold goods on credit to Ram rupees 12,000. So first we have to post the journal entries. So draw the format of journal. So what are the columns for journal? Date, particulars, LF number, debit amount, and credit amount. So let us see the first transaction. On January 5th, Ramesh commenced business with rupees 25,000. So what is coming into the business? Cash is coming into the business. So the entry is cash account data. Who is the giver? Ramesh. Ramesh capital account. So the journal entry is cash account data to Ramesh capital account. So see the on January 10th, purchased office furniture for cash. So what is coming into the business? Furniture is coming into the business. So what is going out of the business? Cash. So both are comes under real account. So the entry is furniture account data to cash account. Furniture account data to cash account. And 12, goods purchased on credit from Rao. It is a credit transaction. So what is coming into the business? Goods. It is an expenditure to the business. So purchase account is debited and Rao is the giver of the goods. So Rao account is created. So the entry is purchase account data to Rao's account. On 25th, sold goods on credit to Ram. So here we are selling the goods. It is an income. Who is the receiver? Ram. So the entry is Ram account data to sales account. We have to post in journal book. Journal entries in the books of Ramesh. So cash account data to Ramesh capital account, furniture account data to cash account, purchase account data to Rao's account, Ramesh account data to sales account. We have to record the 4 transactions. So how many accounts we have to open? Let us see. One is cash account. Second is Ramesh capital account. Third one is furniture account. Cash already comes. First one is cash. So purchase account. Fourth one. Fifth one Rao's account. Sixth one Ram's account. And seventh one is sales account. So we have to open 7 accounts from this journal entries. In the above problem, there are 7 accounts are to be prepared. That is cash account, Ramesh capital account, furniture account, purchase account, Rao's account, Ram's account, and sales account. We are going to open 7 accounts. Let us see the first one, cash account. So draw the format of account and write the title as cash account. So cash account, we have to check on which transaction the cash account is involved. On January 5th and January 10th, the cash account is involved in the 2 transactions on January 5th and January 10th. And January 5th, what is the transaction? What is the journal entry? Cash account data to Ramesh capital account. What is the journal entry? Cash account data to Ramesh capital account. Which account we are preparing? We are preparing cash account. We have to check whether the cash account is debited or credited in the journal entry. So in the journal entry, in this journal entry, cash account is debited. The cash account is debited. So we have to post on the debit side. What is the date of transaction? January 5th. Write the date in the date column. So in the particulars column, we write the name of the account credited. In the debit side, we have to write the name of the account credited. That is Ramesh capital account, and the amount should be written in the amount column. What is the amount? 25,000. So here cash account is debited, so we are posting on the debit side. In the purchase column, we write the name of the account credited. Debit side, credit transaction. Debit side, credit entry, credit account name. So remember that in the debit side, we have to write the name of the account credited. So let us see on January 10th, what is the journal entry? Furniture account data to cash account. We are purchasing furniture. The entry is furniture account data to cash account. Which account we are preparing? Cash account. See whether cash account is debited or credited. Here cash account is credited. So cash account is credited. So we have to post on the credit side. So what is the date of the transaction? January 10th. So in the particulars column, we are writing on the credit side. So we have to take the debit account name. So what is the debit account name here? Furniture account. By furniture account and write the amount in the amount column, that is 10,000. So simply it is very easy to write the ledger account. We have to check the account we are preparing, whether the account is debited or credited in the journal entry. If it is debited in the journal entry, we have to post on the debit side. If it is credited in the journal entry, we have to post on the credit side. So here it is debited in the journal entry. So we are posting debit side, the name of the account created. So the name of the account created in the journal. Here cash account is created. So we are writing on the credit side, and the credit side we are writing the debit account name. What is the debit account name here? Furniture account. Okay, in this way, post the journal entries into the ledger account. So first one is cash account, and second one is Ramesh capital account. So what is the journal entry? Cash account data to Ramesh capital account. In the first journal entry, there is Ramesh capital account. What is the journal entry? Cash account data to Ramesh capital account. So which account we are preparing? Ramesh capital account. We have to check whether it is debited or credited in the journal entry. So Ramesh capital account is created in the journal entry. So we have to post either debit side or credit side. Yes, we have to post on the credit side. Why? Because Ramesh capital account is created here. So we have to post on the credit side. So on the credit side, we write the date in the date column, in the purchase column. We are writing on the credit side. So we have to take the debit account name. What is the debit account name here? Cash account. By cash account and enter the amount in the amount column. And 2019 January 5th by cash account 25,000. This is the second account. And see the third one, furniture account. So on January 10th, there is involvement of furniture account. So what is the entry? Furniture account data to cash account. Furniture account data to cash account. So which account we are preparing? Furniture account. Furniture account is debited or credited? It is debited in the journal entry. So we have to post on debit side. Date in the date column on January 10, 2019. In the particulars column, we have to write the debit side, credit account name. What is the credit account name here? Cash account. To cash account in the particulars column and 10,000 amount in the amount column. Okay. What is the next account? Purchase account. So purchase account involved on January 12th. So what is the journal entry? Purchases account data to Rao's account. Purchases account data to Rao's account. So which account we are preparing? Purchase account. We have to check whether the purchase account is debited or credited in the journal entry. So in the given journal entry, the purchase account is debited. So we have to post on debit side. Purchase account is debited. So we have to post on debit side. In the purchase column, we write credit account name. What is the credit account name here? Rao's account. To Rao's account in the purchase column. 2019 January 12 to Rao's account. The amount is 8,000. What is the next account? Rao's account. See the same transaction. purchase account data to RAWS account. Previously we prepared purchase account. But now we are preparing RAWS account. So RAWS account is debited or credited in the journal entry? It is credited. So we have to post on which side? Debit side or credit side? It is credited. So we have to post on credit side. So on the credit side, we write the date of the transaction, January 12 in the date column. In the particulars column, we are writing on the credit side. So we have to post the name of the account debited here. So what is that? Purchases. We are writing on the credit side. We use the word buy. We prefix the word buy. So January 12 by purchase account amount 8,000. So what is the next account? RAM's account. On January 15, the entry is RAM's account data to sales account. On January 15th, RAM's account involved in this entry. So the entry is RAM's account data to sales account. So which account we are preparing? RAM's account. RAM's account is either debited or credited. Yes, it is debited here. So we have to post on debit side. What is the date of the transaction? January 15. In the purchase column, we are writing the debit side. So we have to take the name of the account credited. So what is the credited here? Sales account. So write TO2 to sales account in the purchase column and amount in the amount column. So 2019, January 15 to sales account, the amount is 12,000 should be recorded on amount column. So the last one is sales account. And January 15, what is the entry? RAM's account data to sales account. So sales account is credited here. Sales account is credited in the journal entry. So we have to post debit side or credit side? Yes, we have to post on credit side. Why? Because the sales account is created in the journal entry. So we are posting on credit side. In the date column, we write the date of the transaction, that is 2019 January 15. We are posting on the credit side. So we have to take the debit account name. What is the debit account name here? RAM's account. We are writing on the credit side. We use the word buy RAM's account in the purchase column and the amount 12,000 in the amount column. In this way, we record the journal entries into their concerned ledger account. This is the way of posting journal entries to the ledger account. So up to the time we are just posting the journal entries. After posting the journal entries, we have to balance the account. We have to find the net results of the account. To find the net results of the account, we have to balance the account. So what is balancing of account? So everyone know the simple balance. Balance means making equal. Balance means making equal. So we have two sides in the account. What is debit side and credit side? We have two sides in account. That is left hand side, right hand side. Debit side, credit side. We have to balance the both. So let us see what is balancing. Balancing is the difference between total debit and credit of an account. Balancing is nothing but the difference between total debit and total credit of an account. It is a difference amount between debit total and credit total. The balance amount is to be written on the side showing shortage. That means lesser side, so as to make the total of two sides equal. For example, the debit side shows the total of 500 and the credit side shows a total of 400. So if you want to make the balance, we have to add the difference amount on the lesser side. So debit side shows 500 total and credit side shows 400 total. So what is the balance amount? 100. These 100 rupees should be recorded on lesser side, that is credit side. We write the credit side 100 rupees. So 400 plus 100. What is the total? 500. That we are making the both side equal. So the balance amount is to be written on the side showing shortage, that is less, so as to make the total of two sides are equal. This is called balancing of account. So balancing of account is nothing but we are finding the difference of the accounts, the difference between debit total and credit total, and the difference amount should be recorded on the shorter side to make the both side equal. This is called balancing of account. It is done periodically as per the requirement of the business. It may be daily, weekly, or monthly. Let us see the procedure for balancing. How we balance an account. What is the procedure for balancing? Find out the total of the amount column of two sides and put the highest total on another side as total. First, we have to find out the total of debit and total of the credit roughly. So, if the debit side total is more, we have to put the debit side total first, and the same amount should be recorded on the credit side total also. After that, find the difference between the two sides. So, this difference is called balance. So, the balance amount, previously we talked 500 debit, 400 credit. So, what is the highest total? 500 on debit side. So, we have to write first 500 on debit side, and the same amount should be recorded on the credit side. After that, we have to find the difference. What is the difference? 500 minus 400. That means we get 100 rupees. This 100 rupees, this 100 amount is called difference. This amount should be recorded on the lesser side. If the debit side total is greater than credit side total, the difference is called debit balance. If the debit side total is greater than credit side, then it is called debit balance. If the debit side total is more than the credit side total, then it is called debit balance. If the credit side total is greater than the debit side total, then the difference is called credit balance. So write the difference on the side which show short less to make the both side equal. So in the given example, so 500 debit, 400 credit. So first we recorded 500 on the total column debit side and the same recorded on the credit side. After that, so which side shows less? Credit side. So credit side we record that 100 rupees to make the both side equal. So we record the difference amount on the lesser side. Write the date on which the account is balanced in the date column. Generally, we balance at the end of the day or at the end of the week or end of the month. After placing the balance on the appropriate side of an account, the total of debit and credit are equal. So after writing the 100 on the credit side, so both sides 500 is equal. The total must lie on same horizontal line. We make a same horizontal line and draw one line above the total amount and two lines below the total amount. So let us see with one example, then you can easily understand. If the balance entered on the debit side, if the balance entered on the debit side, write to balance C by D in the purchase column. If the balance is entered in the credit side, write by balance C by D in the purchase column. So on the lesser side, we entered 100 rupees. That should be recorded in purchase column as to balance C by D. So if it comes on debit side, we write to balance C by D. If it comes on credit side, we write by balance C by D. The balance so derived is called closing balance of account. So the difference is called closing balance of an account. It is to be brought down to the next day on the side of the account whose total is greater as noted at time of closing the account as to balance B by D when the debit total is more and by balance B by D when the credit total is more. So if the balance C by D comes debit side, brought down comes under opposite side, that is credit side. If the balance C by D comes at credit side, the B by D comes opposite side, that is debit side. Balance C by D means balance carried down, and balance B by D means balance brought down. So let us see one example, one problem from your textbook. Problems on ledger. Dear student, turn the page number 65 and problem number 9. Journalize the following transaction of Mr. Prahalad and post them in ledger and balance the same. 2019 February 1st, Prahalad invested 50,000 cash in the business. So we have to make journal entries and prepare the ledger account. So first you have to draw the format of journal. So journal contains 5 columns: date, particulars, LF number, debit amount, and credit amount. Okay. So what is the first transaction? Prahalad invested 50,000 cash in the business. So what is coming into the business? Cash. So what is the journal entry? Cash account data to Prahalad capital account. What is the journal entry? Cash account data to Prahalad capital account. On February 3rd, paid into bank. So paid means deposited into bank. Cash is going out of the business. So the entry is bank account data to cash account. Bank account data to cash account. On 5th, purchased furniture for cash. So what is coming into the business? Furniture. What is going out of the business? Cash. So the entry is furniture account data to cash account. On 7th, purchase goods for cash. So purchase is an expenditure. So purchase account data, cash account. Cash is going out of the business. So the entry is purchases account data to cash account. On 10th, sold goods for cash. So what is coming into the business? Cash. So sale is an income to the business. So the entry is cash account data to sales account. On 15th, withdraw cash from bank. So what is coming into the business? Cash. The entry is cash account data to bank account. Cash account data to bank account. Paid interest. It is an expenditure. So the entry is interest account data to cash account. So cash is going out of the business. So paid salaries. It is also expenditure. So the entry is salary account data to cash account. In this way, we record the journal entries first in the journal book. February 1st, cash account data to Prahalad capital account. On 3rd, bank account data to cash account. On 5th, furniture account data to cash account. On 7th, purchase account data to cash account. On 10th, cash account data to sales account. On 15th, cash account data to bank account. On 25th, interest account data to cash account. On 38th, salaries account data to cash account. So here, how many accounts we have to open? Cash account, Prahalad capital account, bank account, furniture account, cash already comes, purchases account, sales account, bank account, interest account, and salaries account. We have to prepare this account. Now, I am going to prepare the first account, that is cash account. We are going to prepare the cash account. We have to check the journal entries where the cash account is involved. Here, on February 1st, cash account involved. On February 3rd, and February 5th, and February 7th, 10th, 15th, 25th, 30th. Let us post these journal entries into cash account. So draw the format of cash account and put DR on left hand side, CR credit side, that is right hand side. Write the title of the account in middle, that is cash account. This is called head of the account. Dear children, you remember the head comes on the top of the table only. It never comes either on debit side or credit side. If you write cash account on the debit side, it seems senseless. The same way, if you write cash account on the credit side, it seems senseless. So the head of the account never comes on debit side or credit side. So cash account appears on the head of the account, on the top of the account. It never comes either debit side or credit side in the purchase column. You remember this very important point. Cash account, the title of the account never comes in the debit side purchase column and credit side purchase column. Let us see the first transaction. On February 1st, Prahlad invested 50,000 cash in the business. So what is the journal entry? Cash account data to Prahlad's capital account. So which account we are preparing? Cash account. We have to check whether the cash account is debited or credited in the journal entry. So in the journal entry, it is debited. The cash account is debited. So we have to post on debit side. Cash account is debited. So we have to post on debit side. What is the date of the transaction? February 1st. In the purchase column, we write the name of the account created. So we are writing on the debit side. So we have to take the name of the account created. So what is the name of the account created? Here, Prahlad capital account. That is 50,000. See the next transaction. On February 3rd, paid into bank. Paid into bank. So what is the journal entry? Bank account data to cash account. Bank account data to cash account. Cash account is debited or credited? It is credited in the journal entry. So we have to post on the credit side. We have to check whether the cash account is debited or credited in the journal entry. If it is debited, we have to post on debit side. If it is credited, we have to post on credit side. In this journal entry, cash account is credited. So we have to post on credit side. What is the date of the transaction? February 3rd. So write the date in the date column. In the purchase column, we are writing credit side. That means debit account. What is the debit account here? Bank account. What is the amount? 6,000. 2019 February 3rd by bank account 6,000. Okay. 5th, purchased furniture for cash rupees 2,000. So the entry is furniture account data to cash account. Furniture account data to cash account. Cash account is debited or credited? Cash account is credited here. So we have to post on credit side. What is the date of the transaction? February 5th. So we write the date in the date column. In the purchase column. So what is opposite to the cash? Furniture. So we write buy furniture account in the purchase column and amount 2,000 in the amount column. On February 7, purchase goods for cash. So what is the journal entry? Purchase account data to cash account. Here also cash account is credited. So we have to post on credit side. We have to check whether the cash account is debited or credited. If it is debited, post on debit side. If it is credited, post on credit side. Here it is credited, so we have to post on credit side. What is the date of the transaction? February 7th. So write the date 7th in the date column. In the purchase column, we write debit account name. What is debit account? What is against to the cash? Purchases. So write the purchase account in the purchase column by purchase account and amount 5,000 in the amount column. On February 10th, sold goods for cash. We are selling goods for cash. So what is coming into the business? Cash. So entry is cash account data to sales account. Cash account data to sales account. Cash account is debited here. So we have to post on the debit side. So what is the transaction date? February 10th. February 10th to sales account. Amount is 10,000. On February 15th, withdraw cash from the bank. So what is coming into the business? Cash. Cash account data to bank account. The journal entry is cash account data to bank account. Cash account is debited in this journal entry. So we have to post on debit side. So what is the transaction date? February 15th in the date column. In the purchase column, we write the name of the account created. Against the cash is here bank. So to bank account, amount 2,000 in the amount column. February 15th, bank account 2,000. On February 25th, paid interest. It is we are paying the expenditure. So the journal entry is interest account data to cash account. So here cash account is credited. So we have to post on credit side. So on the credit side, what is the transaction date? February 25th. By the name of the account debited. What is the name of the account debited here? Interest account. By interest account, the amount is 800. On February 25th, paid salaries. We are paying the salaries. It is also expenditure. So the entry is salary account data to cash account. Here also cash account is created. So we have to post on credit side. So we have to check whether which account we are preparing, whether the account is debited or credited. Here cash account is credited. So we have to post on credit side. What is the date of transaction? February 28. By salaries 8,000. We recorded all the transaction on debit side and the credit side. Now leave some space on both sides and draw a horizontal line on debit column, debit amount column and credit amount column. So now we have to make the balance. Let us see what we learned from the balance. What is the balance? The difference of total debit amount and total credit amount. So what is the total here? On the debit side, total is 62,000 and the credit side total is 21,800. So balance means we have to find the debit side total and credit side total. The debit side total amount is 62,000 and the credit side total amount is 21,800. Which side shows more amount? Debit side. So we write the highest side amount, that is debit side, that is debit side amount column. We write first 62,000. First we have to check the total of debit and total of credit. So first you post the highest side, that is here 62,000, that is debit total is highest here. So you write 62,000 in total amount column. After that, the same amount should be recorded on the credit side. Okay. Here first we record the total highest total on the debit side, that is 62,000, and the same amount recorded on the credit side. So here credit side shows lesser amount. So we have to balance here. How we make the balance? What is mean by balance? The difference between total debit amount and total credit amount. Debit total is 62,000, credit total is 21,800. Balance is equal 62,000 minus credit total 21,800. The balance figure is 40,200. So where do we record? We record on debit side or credit side? We have to record on shorter side, lesser side. Here credit total is lesser total. So we have to post on lesser side. What is the date? Generally, we record on the end of the month. So February, the last date is February 28. So we write in the date column February 28. We are recording on the credit side. So we use the word BY by balance C by D. That is balance carried down. On 28th February by balance C by D. What is the amount? 40,200. We write here 40,200 to make the two sides equal. Now the total of debit and total of credit is equal. So what we done here? First we make the total of debit and total of credit, and first we write the highest total on debit side here, that is 62,000, and the same amount is recorded on the credit side. After that, from this 62,000, we have to deduct the total credit. Total credit of, that means 6,000, 2,000, 5,000, 800, 8,000. If you make this total, that is 21,800. If you deduct this 21,800 from 62,000, you will get the balance amount 40,200. That should be posted on the lesser side. That is here credit side as by balance C by D. So after finding the closing balance, that is balance C by D, we have to bring it down, brought down. So if here balance C by D comes under lesser side and brought down comes under greater side. What is the greater side here? Debit side. Simply you remember like this also. If balance C by D comes under credit side and brought down comes under opposite side, that is debit side. So on the next day after February 28, what comes? March 1st, 2019. March 1st, we write to balance B by D on the debit side, that is 40,200. In this way, we balance the account. Let us see one more account, bank account. So, bank account. So, on February 3rd, paid into bank 6,000. So, what is the journal entry? Bank account data to cash account. So, which account we are preparing? Bank account. So, bank account is debited or credited here? It is debited in the journal entry. So, bank account is debited. So, we have to post on debit side. What is the date? February 3rd. So, write the date of the transaction in the date column. In the purchase column, what is against to the bank? Cash. So, name of the account created. What is here? Cash account. To cash account and enter the amount in the amount column. 2019, February 3rd to cash account 6,000. On February 15, withdraw cash from the bank 2,000. So cash is coming into the business. So the entry is cash account data to bank account. So in this journal entry, bank account is created. If the bank account is debited, we post on debit side. If the bank account is created, we have to post on credit side. So bank account is created, so we have to post on credit side. So we have to write date of the transaction in the date column. In the purchase column, we are writing on the credit side. We have to write the name of the account debited, that is cash by cash account 2000. 2019, February 15, by cash account amount 2000. So bank account involved in this two transaction. Now we have to make the balance this account. See, the total of the debit is 6,000. The total of the credit is 2,000. Which side shows highest amount? Debit side. First we have to make horizontal lines on debit side and credit side. Let us see. We can easily say the debit column, the debit amount column shows highest amount, greater amount. We have to write the first greatest amount on the debit side. We have to write 6,000 here on debit total. And the same amount should be recorded on the credit side also. Okay. After that, from this 6,000, we have to deduct the total of credit. What is the total of credit here? 2,000. 6,000 minus 2,000. That means 4,000. That is balancing amount. So where do we record the balancing amount? On the shorter side. That is lesser side. Here the lesser side is credit side. To make it balance the both side. 6,000 minus 2,000, that is 4,000 as by balance C by D on the end of the day of that month, February 28. February 28 by balance C by D 4,000. So balance C by D comes here credit side. So we have to brought down to the greater side, that is debit side. On the next day, February 28 means what comes after February 28? March 1st, 2019. March 1st to balance B by D 4,000. Okay. I think everyone understood the process of balancing. Dear student, here I prepared two accounts for you. Prepare the remaining accounts. Let us see one more problem. Page number 65, problem number 10. Prepare Pawan account from the following transaction. 2018 March, goods purchased from Pawan, cash paid to Pawan, goods returned to Pawan, paid to Pawan by check, discount allowed by Pawan, and goods purchased from Pawan for cash, furniture purchased from Pawan. If you observe the question, here they are not asking to prepare the journal entries. That means you need not to write the journals. You directly think the journal and post in the account. So which account he is asking to prepare? Pawan account. So let us start. Draw the format of account and write the title of the account. That is Pawan account. So we are going to prepare Pawan account. Right? DR on the left hand side, CR on the credit side, right hand side. So this DR indicates debit side, this CR indicates credit side. See the first transaction. What is the first transaction? March 1st, goods purchased from Pawan. You have to think what is the journal entry. So goods purchased from Pawan. It is a credit transaction. So what is coming into the business? Goods, that is purchase, is an expenditure. What is the journal entry? Purchase account data to Pawan account. What is the journal entry? Purchase account data to Pawan account. Pawan account, we are preparing the Pawan account. What we have to do? We have to check whether the Pawan account is debited or credited here. Here, Pawan account is credited. So we have to post on credit side. Have to check whether the Pawan account is debited or credited. It is credited here. So we have to post on credit side. What is the transaction date? March 1st. In the purchase column, while writing the credit, have to write by and name of the account debited. So what is the name of the account debited here? Purchase account. By purchase account, what is the amount? 38,000. March 1st, by purchase account 38,000. See the next transaction. On March 6th, cash paid to Pawan. We are paying cash to the Pawan. Pawan is the receiver. So what is the entry? Pawan account data to cash. Pawan account data to cash. So in this journal, Pawan account is debited. So we have to post on debit side. We have to post on debit side. So what is the date of the transaction? March 6th. You write March 2018, March 6 in date column. In the purchase column, while writing the debit side, we have to take the name of the account credited. So what is the account against to the Pawan? Here, cash. So we have to post to cash account in the purchase column and the amount 5,000 in the amount column. March 10th, goods returned to Pawan. So we are returning goods to the Pawan. Pawan is the receiver, and goods returned to Pawan. That means it is a purchase return, which is previously purchased. So the entry is Pawan account data to purchase return account. We have to reduce the expenditure. The entry is Pawan account data to purchase return account. So in this journal entry, Pawan account is debited. So we have to post on debit side. We have to check whether the Pawan account is debited or credited. Here Pawan account is debited. So we have to post on debit side. What is the date? March 10th in the date column. In the purchase column, what is against account to Pawan? Here purchase return account. So we are posting on the debit side. We have to take the credit account. What is the credit account in the journal? Purchase return account. Right? To purchase return account in the purchase column and the amount in the amount column. To purchase returns account 1500 in amount column. Okay. Let us see the next transaction. On March 14, paid to Pawan by check. We are paying to Pawan by the check. He is the receiver. So the entry is Pawan account data to bank account. We are paying through check. That's why we write bank account. So who is the receiver? Pawan. So the entry is Pawan account data to bank account. So Pawan account is debited here. So we have to check Pawan account is debited or credited. It is debited in the journal entry. So we have to post on debit side. What is the transaction date? 14. And in the purchase column, we write the name of the account credited. That is to bank account in the purchase column and write the amount in the amount column, that is 6,800. On March 20th, discount allowed by Pawan. So Pawan allowing discount. That means, is it income to the business or expenditure? He is allowing the discount. That means it is an income. So for us, it is discount received. So what is the entry? Pawan account data to discount received account. Discount received is a nominal account. It is an income. Debit all expenses, losses, credit all incomes and gains. So the entry is Pawan account data to discount received account. So here Pawan account is debited. So we have to post on debit side. What is the transaction date? March 20th. March 20th in date column. In purchase column, write name of the account created, that is discount received account, to discount received account in the purchase column, and write the 500 amount in the amount column. On March 26, goods purchased from Pawan for cash. Goods purchased from Pawan for cash. So what is the journal entry? Purchase account data to cash account. If you observe the journal entry, there is no Pawan account either in debit or credit. So this entry doesn't appear in the Pawan account. Why? Because there is no involvement of Pawan. So it is not posted in the Pawan account. So you make a circle in your textbook. So we are not recording this transaction in Pawan account. Why? Because there is no involvement of Pawan account in this journal entry. On March 28th, furniture purchased from Pawan. So what is coming into the business? Furniture. So is the giver Pawan. So the entry is furniture account data to Pawan account. So here Pawan account is credited. So we have to post on credit side. Pawan account is credited. So we have to post on credit side. What is the transaction date? March 28th. Write the date in the date column, that is March 28th by. So we are posting credit side. So we take the name of the account debited. So name of the account debited is furniture account. By furniture account, what is the amount? 8,000. Write the 8,000. So now all the transactions are recorded in Pawan account. After that, we have to make the balance. So before balancing, write horizontal lines in amount column. Leave some space and write the horizontal column in debit and credit amount column. So we have to check total of debit and total of credit first. So debit total is 13,800. Credit total is 46,000. So credit side shows more amount, greater amount, that is 46,000. First, we have to record this 46,000 on credit side. After that, the same amount recorded on the debit side. Now, we have to deduct the total of debit from this total of credit to make the balance. So balance is here credit total minus debit total. That is greater total minus lesser total. So credit side shows 46,000. Debit side shows 13,800. The difference, the balance amount is 32,200. It should be recorded on lesser side. Here lesser side is debit side. So we record as on the last day of the month, March, that is 31st, March 31st, to balance C by D. We write to balance C by D in the purchase column, and this balance amount should be recorded in debit amount column. Now the total is equal to 46,000. Here, balancing means make equal on the both sides. 46,000, 46,000. After writing 32,200 on debit side, the total is 46,000. So after making the balance C by D, we have to brought down on the opposite side. Here balance C by D comes on debit side. Brought down comes on the credit side. On the next day. What is the next day of March 31st? 2018, April 1st. By balance B by D, 32,200. So balance B by D is shown on the greater side and balance C by D shown on the lesser side. In this way, we prepare the accounts and balance the accounts. So what we have learned today? Today we learned what is a ledger. Ledger is a book in which we record all types of accounts. The combination of all the accounts is called ledger. Is a book. Posting. What is posting? Posting is nothing but the process of transferring journal entries from the journal book to ledger book in their concerned account. And we have learned procedure for posting and balancing and procedure of balancing. What is the balancing? Balancing is nothing but the difference between the total of debit, total amount of debit and total amount of credit. Test your understanding what is ledger, what is posting, and prepare the Mahesh account from the following. On 2018 December 1st, sold goods to Mahesh rupees 50,000. So what is the journal entry? Mahesh account data to sales account. On third, check received from Mahesh. So what we are receiving? Check. That means bank. Bank account data to Mahesh account 10,000. Cash received from Mahesh 20,000. What is coming into the business? Cash. Cash account data to Mahesh account 20,000. Goods returned by Mahesh. Mahesh is the returning goods and he is the giver. So sales returns account data to Mahesh account 8,000. Sold goods to Mahesh for cash. We are selling goods to Mahesh for cash. So what is coming into the business? Cash. Cash account data to sales account. You need not to write the journal entries. You directly prepare the Mahesh account. Thank you, children. Thank you for watching the session. Thank you, madam. Over to Prasanna, madam.
Thank you, sir. Very nice class. I hope students have understood very well. Children, with this, you have completed the ledger chapter, but children, you need practice for this. For this, we have one more session as it is a lunch time. So we will close the session here. Thank you very much, sir. Thank you, children.
Thank you, madam.